Hello, YouTube and X. It's your main man, BTM here, bringing you back to the BTM Crypto News Network. So thanks for joining. Don't forget to like, share, and subscribe. And hit your main man up with a super chat. So welcome back, everyone. If you're new here, we cover XRP, crypto news, and major developments shaping the future of digital finance. So thanks for joining. What up, Silver Days? What up, Yazim? What's going on with your fam? Before we dive in, let me ask the chat a question. Everyone here, type it in the chat. Do you think major banks will eventually adopt XRP? Type in the chat yes, banks will adopt, or no, banks will build their own systems. And I don't think the banks will build their own system, right? It doesn't even make sense. It seems like, from a financial point of view, they would use um, the current system, right? It takes a lot of time and money to build uh, a system. Why not just use an existing system that's already here and just increase the adoption, right? Why would you build it from scratch? It doesn't even make sense. It would be better just to use what's already out there, right? You could adopt them and integrate it to your system. Something interesting just happened involving XRP and one of the largest banks in the United States. There's a new discussion circulating about Bank of America maybe hinting at a potential blockchain payment system that could involve XRP technology. Now, if this is true, or just turns out to be true, it could be a major development for the XRP ecosystem and institutional adoption. So today we're going to break down exactly what was said, whether XRP is actually involved, and what this could mean for the future of crypto. So let's see here. Let's go through the numbers and the regular adoption. So let me see. This is the screen share or the spotlight and see what we can see. So let's turn that spotlight on. And of course, this is Caleb and Brown. Caleb and Brown is the official sponsor for the BTM Crypto News Network. They do 24/7 support with a expert, right? You actually talk to someone, not an automated system, not a reply, not an IVR, actual person, and they give you a one-on-one broker. So if you're new to crypto and you're looking to get involved, I would say you could start here because they also self-custody your crypto, so you don't have to worry about someone coming in, hacking you, you losing your password or your seed phrase and not being able to access your crypto. I know firsthand because it's happened to me on several accounts where you don't use it a lot and you come back to it and you don't have that password. You don't have your seed phrase, so you're unable to access the account and you kind of lose your crypto. So that's not what you want to do. But big shout out to Caleb and Brown and helping people on their crypto journey. So let's look at the bubbles real quick. There's a lot of green in the market. It appears a lot of people are pulling out of the assets like gold and silver and coming back into crypto because oil is tanking. I don't know how long this will last. I don't know if this is something that's going to continue to happen, but you can clearly see the people that jumped crypto last week are running back to it. So, not financial advice, but I would say you could DCAE in and wait for the dip. So, Qubits is up 15.2%. Solana is up 4.5 on the day, down 0.1 on the hour, down 1.7 on the week, down 1.7 on the month, down 33.3 for the year to $85.88. CVX is up 5%, Dash is up 4.9, ICP is up 0.6, Safe is up 0.9, Algorand is up 1.3, Casper's up 1.2, Gala's up 2%, and Jess is up 3.1. Arbitron is up 2.5. Avalanche is up 4.8. Monero's up 0.9. Zcash didn't stay down long. Zcash is up 7.2 on the day, down 1.4 on the hour, down 3.9 on the week, down 11.5 on the month, but still up 613% on the year to $213. Might try to snag a couple of tokens while it's down. AIOZ is down 2.9. World Liberty Financial is up 2.4 at 9 cents. BitTensor Tau is up 5.6 on the day, down 0.4 on the hour, up 2.8 on the week, up 15.8 on the month, and still down 22.9 on the year. Pi's up 2.3, Nexo's up 1.5, Render's up 2.3, ZK is up 3.8, Telecoin's up 3.2, FET is up 1.3, Monero, Near's up 0.9, XDC is up 1.1, up 0.1 on the hour. ZBCEN, our favorite payroll processor, is up 6.5 on the day, up 0.5 on the hour, down 1.8 on the week, down 10% on the month, and up 51.9 on the year to the 0020. So we're back at the 0020. So definitely continue to DCA in. Not financial advice. This is just for entertainment purposes. But with the market being down lately and all the uncertainty, I'm actually happy it is starting to pull back up. Even with the release of the super app, I thought it would be up higher, but the interest in crypto is down. If you haven't been paying attention, crypto has been taking a beating lately, and even the videos aren't getting as much views as they used to. Just as a whole, nobody's really paying attention to crypto, which is great for us because you can pick it up now and continue to diamond hand, because we know, maybe everybody else doesn't know, but we know the potential value of crypto. It will come back, guys. We know that. They know that. They're just trying to get us to sell it now so they can buy it up as the whales continue to gobble it up, and they'll sell it back to us when the price goes up for them to make a profit on. Satoshi's up 8%. World Liberty, World Mobile. I always say World Liberty. World Mobile's up 1.4 on the day, down 0.1 on the hour, down 3.7 on the week, down 12.9 on the month, and down 67.7 on the year to 6 cents. Ethereum Classics up 2%. Prime's up 1.2. Alchemy Pays up 1.1. Chainlink's up 4.2. XNO's up 3.6. Swarm's up 2.5. XLM is up 1.3. Sui is coming back hard, up 8.2. Quant's up 1.5. Is there anything else we're missing here? Let me know so we can add it and keep an eye on it. AIXBT is up 8.1. Ton Coin is up 0.8. Litecoin is up 1.9. POW is up 7.1. Pith is up 2.1. Jasmine is up 5.2. XPR is hanging in there, up 2.7 on the day, down 0.1 on the hour. Why is everything down 0.1? What happened in the hour? For the week, it is up 1.6. For the month, it is down 6.4. For the year, it is down 46.3. Ondo's up 2.5. Bitcoin Cash is up 0.5. Quant's up 1.1. Radian's up 5%. Canon Network is down 3. What is going on with Canton? Nero is up 2.3. So let's look at the big boys, the market makers. Bitcoin is at 68,000. It did go down to 65, but it's coming back down 0.2 on the hour, up 3.4 on the day, down 0.9 on the week, down 0.6 on the month, down 17.5 on the year. See, Bitcoin, Ethereum's down 2.9, or up 2.9, down 1% on the hour, down 2.1 on the week, down 3.9 on the month, and down 2.2 on the year. But it's back in that 2,000 range, so it ain't doing too bad. As long as it can hold that 2,000 pretty stable. And over to, looks like XRP's down to number 5, our favorite cross-border payment processor. Still hanging in at $1.36. And remember, we said last week, as long as it stays above $1.35 and can hold that resistance level at that support, as long as it doesn't go under $1.35, we should be looking for a push up soon. Down 0.3 on the hour, up 1.3 on the day, down 2.1 on the week, down 3.8 on the month, and down 37.5 on the year. And still at $1.36. So things are good. Let's see here. Let me see if we can come back to that. Let's look at the ETFs real quick. So spot ETFs are 9.9 mil won. Leverage volume is 18.3 mil won. So if we go down to the spots, Bitwise, which has been pumping like crazy lately, is up 1.25 on a day the market's down. $15.36, up 3.5 million on the day. Canary Capital is $14.61, up 1.32, 2.49 mil won on the day. Franklin Templeton is $14.90, up 1.22% to 1.34 mil won on the day. Grayscale is still under $30. Come on, man. $26.62, up 1.22% to 1.5 million on the day. 21 shares is $13.38, up 1.45 to 981,000 on the day. Rex is still in last place with 257K, $11.29, up 1.71 on the day. The derivative market is doing okay. Turkham's 2X is up 1.71% to $4.16 with 12.1 million trading volume. Volatility shares is $43.40. What is going on with volatility shares? The 2X leverage is up 2.07% to 2.71 mil won. How is this higher than Grayscale? The Grayscale guys, what the freak is going on here? Pro shares is $3.99, up 2.57 with 2 million 24-hour trading volume. Volatility shares is $7.81, up 1.30, and Amplifies $14.72, up 1.24%. Keeping it moving. I always look at the wrong one here. So we'll go over to the dashboard. This is the dashboard. Over to the radar. On the radar, escrow is 36.9 billion. Circuit supply 63 billion. XRP burnt is 14.3 million. RLUSD is 1.5 billion. Exchanges hold 14.2 billion. ETFs and indexes are up to 795.3 million. The ETFs and index is going to hit that billion mark soon, right? These guys have been pumping hard all 2026. I think soon, before the Clarity Act passes, I bet this index and ETFs hit over a billion. DeFi in AMM is 233.8 million. Tokenized RWA is 1.5 billion, and the treasury is 473.3 million. So if we go down, total on exchanges is 14.2 billion, which is weird because I thought people were taking it off the exchange. Upholds up 6.2 million to 38% of the supply. Binance is 16.4. BitThumb is up 7.3 million with 12.7%. Upholds right on them. Right on them. I told you guys, Uphold is going to be in the top. Damn, they're already in the top 5. Dang. Up 29,000 to 11.5. And I suspect soon, maybe by the end of the week, or by the end of March, Uphold will be in number 3, the third place with the third most on the exchanges. So Uphold is climbing like Batman out here, bro. They were down below. I want to say they weren't even in the top 10. I got to go back and check some old videos. I know that they've been climbing because somebody has been buying up like crazy on Uphold. Bitbank is 366 with 4%. CoinCheck is 3.9 with 110. Lost on the day, actually. eToro lost 152K. Crypto.com's also growing with 977K to 2.3. And I think Crypto.com will be in the top 10 with XRP on exchanges soon as well. Looks like the American exchanges are buying it up. What is that? Coin One's number 9 with 2.2, and Bitflyer is number 10 with 1.3. Going over to Coin Market Cap. The crypto market cap is 2.3 trillion, up 2.39%. CMC 20 is $140.73, up 3.34%. Fear and greed is back into fear at 22. It's been an extreme fear, and looks like they're going to be pushing on up out of fear pretty soon. Altcoin seasons at 36. They're pulling away from Bitcoin dominance. In the crypto, average crypto RSI is 51.46. So almost dead center, right? Dead center at 50 point. That is center, actually. 50.46. Between oversold and overbought. I think it's going to keep pushing to overbought, which is going to keep pushing the market up. This is XRP is $1.35, up 1.33%. Market cap is 83.5 billion at 1.3. 24-hour trading volume is 2.4 billion, up 54.3%. This guy was telling me XRP might hit 100 billion market cap It might even push up to 500 billion by the end of the year, which would definitely push it past $5, maybe on up to $10. I got to do the math. I haven't done that yet, but it's definitely running. XRP could drop towards 20 cent but the bigger driver is still Bitcoin. Crypto cycles tend to peak late in the cycle and correct the following year. If Bitcoin loses key support, altcoins like XRP usually fall harder. For now, $1.20 is the key level to watch. XRP ETFs could trigger a supply shock. Something unusual may be forming beneath the surface. While Bitcoin ETFs took months to affect the market, analysts believe the XRP could react very differently once spot ETFs approvals arrive. The key difference is structure. Current XRP ETFs are future based, meaning they don't actually buy XRP, they simply trade contracts, which leaves the real token supply untouched. That's why roughly 220 million sitting in those products haven't moved the market much. The spot ETFs work differently. Every new share requires real XRP to be purchased and locked into custody. That means institutional inflows could directly remove tokens from circulating supply, and the supply is already tight, super tight, right? Tighter than that booty out here. So once these XRP ETF supply continues to push, the supply is getting shorter and shorter, and XRP is primed to explode. I don't care what the rest of these influencers are telling you, what your mom's sister's boyfriend barber knows. Trust and believe. XRP is on the verge of taking all the way off. XRP available on exchanges like Coinbase has dropped nearly 90% in recent months, leaving roughly 100 million tokens available for trading. If the spot ETFs begin attracting billions in institutional capital, analysts warn the market could face a serious supply squeeze, the kind that historically sends prices moving very quickly. And I've been preaching to you guys that for months. But let's do this quick video about the domino effect, and then we'll go over to X.
Hello, everyone. Welcome back to Crypto Express. And today is March 8th, 2026. Jake Claver's domino theory is no longer a prediction. It is a live event. And today, the proof just got impossible to ignore. XRP is trading at 136 right now. Fear and greed index sits at 12. That is extreme fear. Bitcoin is hovering near $63,000. The broader market is under pressure. But underneath all of that fear, something massive just happened, and most people completely missed it. Ripple Prime, formerly known as Hidden Road, was officially added to the NSCC directory. The NSCC is the National Securities Clearing Corporation, a subsidiary of the DTCC, the organization that processes post-trade settlement for virtually every securities transaction in America. Stocks, bonds, OTC trades, all of it flows through the DTCC, and Ripple Prime is now inside it. Before Ripple acquired Hidden Road for $1.25 billion in 2025, that firm was already clearing $3 trillion annually for over 300 institutional clients. Now, with NSCC membership confirmed, the roadmap is clear. Migrate that institutional post-trade volume onto the XRP ledger. Settlement that currently takes 2 to 3 days through traditional rails, processed in 3 to 5 seconds on XRPL. Ripple's own CTO, David Schwartz, posted on X with 2 words, "Seems important." That is an understatement. As one analyst put it, institutional utility is no longer a promise. It is an operational reality. DTCC volume now has a legal and technical path to the XRP ledger. Now let me give you the domino theory scoreboard, live, as of today. Domino 1, oil shock, confirmed. Brent crude surged after the Iran-Israel strikes. Bitcoin dropped to $63,000. It is in the data, not the theory. Domino 2, yen carry trade, in motion. Japanese bond yields are at 30-year highs. The yen is firming against the dollar. Japan's trade balance is under pressure. Claver mapped this out months ago. It is running exactly on schedule. Domino 3, Treasury and liquidity stress forming. Japan is the single largest foreign holder of U.S. treasuries. If they are forced to pull back, global bond markets feel the shockwave. The conditions are assembling. Domino 4, XRP as the solution, no longer waiting. Ripple Prime is now inside America's core clearing infrastructure. The XRP ledger handled over 1.5 billion XRP in transactions just this week alone. The institutional foundation is being built quietly while most people focus on the price. 3 dominoes falling, the fourth one just landed on Wall Street. Claver's critics are fair to point out that his $100 target for 2025 did not materialize. XRP ended last year near $1.87. His answer has always been the same: timelines shift when you are building real financial infrastructure. Ripple's journey is 13 years long. Over 1,700 NDAs with governments, banks, and Fortune 500 companies. Societe Generale just launched a euro stablecoin on the XRP ledger last month. Options trading for institutions is being added to XRPL. The destination has not changed. The infrastructure is just now catching up to the vision. Technically, XRP needs to reclaim 1.45 to shift short-term momentum. Above that, 1.62 opens up, lose 1.30, and 1.11 comes back into play. The RSI is near 40, not oversold, just consolidating. Seasonality is also on the side of bulls. Over the past 12 years, March has delivered an average 18% return for XRP, the strongest month of the first quarter. Most people are watching the price and panicking. The smarter question is, what is being built while everyone else looks away? That is all for today on Crypto Express.
So shout out to Crypto Express. Let's go over to the BTM Crypto News Network and see what is going on. Let's talk about why this is such a deal, why Bank of America matters. Bank of America is one of the largest financial institutions in the world, talking about millions of dollars in assets, global payment infrastructure, relationships with governments, and institutions. So when a bank of this size is exploring blockchain technology, the entire financial industry pays attention. Ripple and banking infrastructure, a lot of people don't realize that the company closely associated with XRP, the Ripple Labs, has spent years building technology designed specifically for banks and cross-border payments. The idea behind the system is simple: make international money transfers faster, cheaper, and more efficient with traditional banking rails. So currently there is the SWIFT system, which is slow with settlement time. I think it takes 3 to 5 days or something crazy. And the transaction fees cost a lot, right? Like they have whole separate accounts just to handle the transaction fees. Bank of America is looking at blockchain because the global financial system is slowly evolving. Banks, governments, and regulators are experimenting with digital financial infrastructure. Even regulators like the U.S. Securities and Exchange Commission are working through how digital assets should fit into financial systems. Digital payments, tokenization, and faster settlements. What's interesting is even with this development happening, XRP and the broader crypto market has been moving down recently. And this happens often in crypto. Major developments sometimes occur while the market is quiet or consolidating. And that's why many investors watch both price action and underlying adoption trends. If a major bank like Bank of America ever adopted XRP technology, what price do you think XRP could realistically hit? $2, $5, $10, or higher? So let me know what you guys think about that in the chat. $2, $10, $5, or higher. So let's continue back over to the BTM crypto news and see what's going on. So this is XRP will shock everyone. Are you ready to create generational wealth? $100 plus XRP. Oil plummets, new opportunities for Bitcoin and XRP. And I didn't even read this havingjobs.com. We'll come back to that. Back over to. So this is Stop Believing Fake News. Think of yourself. XRP community. Let's see what my main man, Coach VJ, has to say. He's been on it lately. So let's see what he's talking about.
Cannot just be listening to parroted information anymore. You have to expand your mind, and you have to logically sit back and take a deep breath long enough and stop reading headlines and go, wait, that doesn't make sense. And how do you get there? Get your shit together physically, spiritually. Get your body in order. Get your mind right. Get your spiritual walk right, because it develops discernment. Then you'd be like, wait a minute. Why on earth would BlackRock still be the number 3 holder in MicroStrategies or Strategy B now that's a Bitcoin treasury if they think Bitcoin's a fraud? Well, in 2023, Larry Fink said, I was wrong. I was wrong. If you're worried about the debasement of your country's currency, Bitcoin might be a good choice. And then later on, they launch a BlackRock IBIT ETF, and now they're the number 1 holder in Bitcoin through IBIT. They're the number 3 holder in the number 1 Bitcoin treasury in the world. Cannot just be listening to parroted information anymore. You have to expand your mind, and you have to logically sit back.
So shout out to Coach VJ, and he's right. These guys are telling you not to buy crypto and turn around and be the number 1 holder in Bitcoin. How is that happening? Jimmy V of Valhalla Capital says XRP will reach 5-digit prices when the global regulations clear up and become the world's ultimate bridge currency. The roadmap is clear. Adoption's growing, and the XRP community is stronger than ever. Are you ready for the next big surge? Please believe, bro. Believe it. We've been ready. U.S. banking lobbyists weigh lawsuit against OCC over crypto. FinTech National Trust Charters a report. So it says that these guys are suing because they don't want crypto and the crypto yield to take effect and put these guys out of business, especially the banks, right? The banks are fighting tooth and nail not to get that Clarity Act approved. So this is Brian M., the CEO of Bank of America. I didn't even know he was the CEO of Bank of America. I thought it was somebody else, actually. Said on Fox News that the bank could potentially use XRP for payments. Trillions in global capital are expected to move into the XRP ledger with growing momentum around RealFi and its real token. And it's weird, there's no actual article here. Kind of shocking, actually, but keeping it moving. Dude, they're involved in a lawsuit that wasn't fully settled until August 2025. Most exchange delisted them. Banks would not touch them. But look who showed up and spoke at Ripple Swell November 2025. Probably nothing, and nothing will happen of any significance. World's biggest players are showing up to the Ripple 2025 in New York. And looks like all of the banks were there. So this is NASDAQ, BYN, Franklin Templeton, which has a ETF, Citi, BlackRock, which is talking about an ETF, Fidelity, which I think has an ETF, JP Morgan Chase, MasterCard, Group, Montlys, or is that Moody's? I can't read that. State Street, DBS, and Bloomberg. I'm just saying. Until the Clarity Act passes, not just for Ripple, the whole asset class and DYC, what your XRP, I have 25 cents and 135 now, all things considered. I am giddy over 5.44x. Who wouldn't be too? Hey, I hope it goes under $1 so I can buy as much as I can get my freaking hands on. I don't know about you guys, but I'm definitely buying much more. And this is XRP News, August 3rd, 2026.
Events.
That's my birthday.
I just see the dominoes. I see what's up there. I see a certain order and cascading events that has to take place. I know what the long-term outcome is. I know that XRP has to be a much higher price to be able to save the back-end settlement of markets and de-risk in a credit crisis, which is what I think unfolds from the spike in oil that we're getting right now. But there's other things that still have to take place, right? And this is where people, will kind of trail off and they're like, well, what if this happens, but this doesn't happen? And what if that happens, but this happens instead? Look, I've got my thesis. You are entitled to yours. Okay. I put mine out 2 years ago, and we're literally to the day. Today, 2 years ago, I put out the domino theory, and we are here. Everything that I laid out in that original video has either come to pass or is coming to pass right now. So buckle up and hold tight.
Wow. I just realized this is 3-8, not 8-3, but he's right. To
I
the
just
day
see
he
the
put
dominoes.
it out, right?
I see what's up there.
The world's largest financial clearing and settlement company, DTCC, has integrated XRP and XLM as key liquidity tokens for global tokenization. DTCC possesses over 2.5 trillion in annual transactions. It is happening. So this is, how can I transfer ABC token? This is XLM and this is XRP. Prepare payment. Ripple bridge node, Stellar bridge node, Ripple bridge node, some provider bridge node, bridge graph, pulls existing paths between the systems. I think it's kind of complex. I'm not going to read through all of this, but clearly XRP is in the game. Let's go back to XRP sale warning. The total number of XRP currently in loss just hit a 7-year high. With 60 billion XRP underwater, the RSI is now extremely oversold, which means there should be some pumping coming soon. I would watch this video. We'll come back to that. DTCC Ripple, 2.5 trillion transactions and infrastructure is already built.
Crypto, but most people have no idea XRP may have just connected to the system that moves quadrillions of dollars. Everybody keeps asking the same question: when will institutions start using crypto? But something just happened with Ripple that almost nobody's talking about. Ripple's institutional brokerage Hidden Road just got listed into the DTCC clearing system. Now, if you've never heard of the DTCC, it's basically the plumbing of Wall Street. Stocks, derivatives, securities. The DTCC manages and settles a massive portion of the financial trades in the United States. But here's the part that melts people's brains. The DTCC system processes over $2 quadrillion worth of transactions every single year. That's quadrillion with a Q. And now Ripple's institutional prime broker, which already handles trillions in trading volume, is plugged into that infrastructure. Now combine that with something else that's happening right now in Washington, the Clarity Act, a bill that could finally define crypto regulation in the United States. Think about that. Wall Street suddenly has clear rules for digital assets, and Ripple already has infrastructure connected to the core of the financial system. XRP stops just being another crypto. It's financial infrastructure. If even a tiny fraction of those global settlement flows ever touch the XRP ledger, that's when things can get very interesting. Make no mistake, if the rails are already being built, the only thing left is volume.
So shout out to XRP Lord, and he is right. All we need is the freaking volume. Google reports that the Federal Reserve is set to adopt the XRP global payment solution. Ripple is already buying back XRP, aiming to shift it from retail investors to institutional hands. And that's what I've been telling you guys. When we have been telling you they're trying to foot it because they're trying to buy it back before XRP can buy it back and sell it to the institutions. So whoever and whatever snatches up as much XRP as possible can sell it to the institutions so the institutions can sell it right back to us at a premium price. Yes, the Federal Reserve plans to take ownership of XRP Ripple as global payment solutions. Is Ripple buying back XRP as part of their buyback program? Yes, Ripple's buying back XRP as part of their buyback program to take it out of the retail hands and into institutional hands. David Sachs says banks will go all in crypto after the market structure legislation pass, and they are stalling us out, guys.
Everyone leaves a little bit unhappy. Right.
They are taking their sweet time to get us to sell so they can pick it up cheaply.
A good compromise is everyone leaves a little bit unhappy. Right. But I think what's going to happen is that after market structure passes, the banks are going to get fully into the crypto industry. So we're not going to have a separate. A good compromise is everyone leaves a little.
Have you seen this? A Visa crypto executive is discussing Ripple's expansion and how XRP, RLUSD, and the Ripple ledger fits together.
But what's not clear yet is how RLUSD translates to XRPL, translates to XRP, and then it seems like the engine that's funding a lot of this growth and acquisition is ultimately XRP, with the value expected of coming back from RLUSD. And so you have this like really interesting flywheel that is playing out for them, but not necessarily clear how the pieces are connecting from a fundamental practical standpoint. And so like respect to they're executing on the M&A path, and I could see paths here. But what's not clear yet is how RLUSD translates to XRPL, translates to XRP, and then it seems like the engine that's funding a lot of this growth and acquisition is ultimately XRP, with the value expected of coming back from RLUSD. And so you have this like really interesting flywheel that is playing out for them, but not necessarily clear how the pieces are connecting from a fundamental practical standpoint. And so like respect to they're executing on the M&A path, and I could see paths here.
Shout out to Visa. What's the video? Just in, billionaire David Morehouse drops a massive prediction live on Bloomberg. David Morehouse says AI agents will buy and save in XRP and crypto. They will have to use crypto and they will not use banks. It's already happening.
And you also said you don't know whether OpenAI, Anthropic, or XAI will win the AI race, but you're certain they'll use crypto. How might that look like in practice?
Yeah, I think that's a super important point that AI agents aren't going to go down the street to a ionic column marble bank and get a normal bank account and transact in paper money. They have to use electronic money. As AI agents become more impactful, they have to use blockchain assets, and that will just increase the demand for blockchain assets.
We, in your view, in the coming years, are going to have AI agents act in a fiduciary or financial capacity on our behalf?
It's already happening. AI agents are doing commerce. It's spinning up very, very quickly.
Are they using crypto or are they using USD?
No, they have to use crypto. Most AI agents will have to use crypto because they won't be backed by entities that can go get bank accounts for paper money.
And you also said.
So I think we talked about that on the show as well, right? When they start making transactions, they're not going to use banks, right? They're going to use crypto. And we know which cryptos. U.S. banking lobbyists weigh lawsuit against the OCC over crypto fintech trust. National Trust Charter report. The Bank Policy Institution is evaluating a legal action against the OCC over the regulator's move to grant national trust charters to crypto and fintech firms. The Guardian reported smaller banking groups and state regulators have warned the OCC that approving crypto and payment firms under trust charters could weaken oversight, heighten systemic risk, and undermine consumer protection. The Bank Policy Institution, a trade group whose board includes JP Morgan, Chase, Jamie Dimon, your boy, Goldman Sachs, David Solomon, and Bank of America's Brian Muldavi, is considering filing a lawsuit against the Office of the Controller of the Currency over the regulator's move to grant a national trust charter to cryptos and fintech firms. You ask why things are slowing down, because these guys are threatening to sue everybody to make sure crypto doesn't move forward. According to the reports, banks contend that granting these firms a national charter provides an official federal emperor without subjecting them to the same stringent capital and compliance requirements as fully fledged banks, a step that aligns with the administration's broader push to integrate digital asset firms into mainstream financial systems. The BPI warned in October that the shift could blur the statutory boundaries of what it means to be a bank. The banking lobbyists' resistance intensified in February when the American Banking Association urged the OCC to address specific risks concerning crypto firms, charters that lack deposit insurance, and comment letters. The ABA called for a suspension of the charter approval until the OCC confirms the receivership and the resolution tools are sufficient for uninsured national banks. Per The Guardian, the OCC pro-crypto stance has also met opposition from the Conference of State Bank Supervisors, representing regulators of all 50 states, in the independent community of Bank of America, which represents 5,000 smaller lenders. OCC continues approvals amidst opposition. Despite mounting opposition, which traces back to early as October, the BPO urged the OCC to reject applications by Circle and Ripple, and the regulator on December 12th granted conditional approval for 5 companies simultaneously: Ripple, Circle, BitGo, Fidelity Digital Assets, and Pavos. Notably, this was the first time the OCC had granted multiple crypto native firms conditional charter approvals at once. Meanwhile, the pipeline of applications has continued to expand in early 2026 as firms seek to consolidate assurance, settlements, and asset safeguards under federal supervision. And this is why the Crypto Act is stalled, because these banks are fighting the approval of the OCC, which are granting the crypto conditional approvals to be banks, right? These guys are getting that banking license. and they are terrified they're going to put the banks out of business. Crypto.com also received a conditional approval on February 23rd to offer custody and staking services, while Resolute shifted its strategy on March 5th, dropping plans to acquire a U.S. lender in favor of de novo banking charter applications with the OCC and the FDIC. A notable entry into the regulatory queue is World Liberty Financial, which announced in January it is affiliate WLTC Holding LLC had submitted an application for a national trust bank charter. The firm intends to use the charter to issue its custody USD1 stablecoin, which has reached over 3.3 billion. I told you these guys are freaking taking over, man. The fight is null and void at this point. Oil prices dropped sharply after the G7 action. The energy market has been volatile as countries in the group of seven, along with the International Energy Agency, confirmed plans to release about 400 billions of oil from the strategic reserves. This move caused the crude oil prices to drop by $15 per gallon in the last 2 hours, falling below the 104 mark. This considered one of the largest interventions of energy market, evaluating equivalent to about 30% of IEA's total emergency reserve, around 1.2 barrels. XRP is still under technical pressure. Meanwhile, the XRP price has decreased about 1.46%, trading around $1.34. This cryptocurrency is still moving within a downward channel pattern. If XRP can hold the support of $1.33, the price may continue to move sideways in the short term. However, if the level is broken, the price could drop to $1.30. On the upside, the nearest resistance area is $1.50 and stronger around $1.90. Data from ETF fund flows show that demand for institutional investors is still divided. While Bitcoin ETF saw an inflow of about 568 million March 2nd to 6th, XRP ETF saw outflow of about 4.08 million. Investors are currently focused on upcoming key economic data released. U.S. Consumer Price Index CPI report is expected to be released on March 12th, as this week could be a significant impact on market sentiment. Additionally, the Federal Open Market Committee meeting on March 18th will be closely watched to assess the Federal Reserve's interest rate direction. Besides macro factors, the U.S. lawmakers are also pushing past the Digital Asset Market Clarity Act before the April 3rd deadline. If passed, the bill could bring legal clarity to the digital asset market. In short, outlook for Bitcoin and XRP is still largely depends on economic data, the Fed's monetary policy, and global geopolitical developments. So this is Bank of America's XRP adoption impact. Bank of America's doing 100% of their intra transactions using XRP. XRP adoption outlook. How will this affect the 2025 market? XRP price prediction for 2025. Bank of America recently announced it will use XRP, its only cryptocurrency, for internal transactions. This news has reflected XRP's growth and positive outlook for the future. This development significantly supports Ripple's blockchain solution, showing its great potential for creating revolutionary blockchain solution in the traditional banking system. The BOA full embrace of XRP signals the financial sector of cryptocurrencies can be considered legitimate and pave the way for a wider adoption. But the move is particularly noteworthy as the banks are usually considered very conservative. This is a massive step for companies behind XRP and Ripple that validates their technology and makes the point that XRP can be used to address inefficiencies in global banking. This comes as speculations of more Ripple adoption make rounds amidst Ripple's official recent meeting with Donald Trump, who promises to bring more crypto adoption to the US. All right, let's check out. Let's see what video we want to start with. Clarity Act could send XRP parabolic. That's why banks killed it.
Right now, they pay you almost nothing in your savings account and pocket the difference. A yield cap protects that entire setup for them. But the thing that gets me is how many people in crypto are still stuck on this Coinbase narrative. They can't let it go. Meanwhile, you've got the president and his own son out here telling the public straight up that the banking sector is where the real obstruction is happening. At some point, the dots connect themselves. Think about the math for a second. Stablecoins are paying people 4% to 5% returns. Now go check your bank account. What are they giving you? Something like 0.01% or 0.05% annually. Barely a rounding error. Meanwhile, those exact same banks turn around and collect 4% plus from the Federal Reserve using your deposits. They keep nearly every penny of that spread for themselves. So yeah, of course they're losing their minds over stablecoins. The whole gravy train falls apart if people figure this out. But here's where it gets truly absurd. Somehow, these banks manage to worm their way into the legislative process. They're not just watching from the sidelines. They're actively putting their fingerprints on the bills and reshaping the language. Somebody explain to me how that's acceptable. These are the same companies fighting to preserve their own profit margins. Giving them input on this legislation is like asking the fox to redesign the henhouse door. None of that should be happening. Zero. But there's more to this story. Kraken's Fed approval is a game changer. Kraken just pulled off something massive. They got the green light from the Federal Reserve for a master account. What does that mean? They're now hooked straight into the FedWire system, which lets them move money at ridiculous speed. Big props to Crypto's Russ for catching that one. I look at this and I see a door swinging wide open. We're standing at the front end of a complete transformation, and it's playing out week by week. One by one, crypto companies are getting the thumbs up to operate inside the existing financial plumbing. That barrier separating digital assets from old school banking, it's crumbling fast, and the rate at which all of this is moving is only going to ramp up going forward. Now, when I see news like this, my brain immediately goes to Ripple. They stand to gain a lot from these kinds of breakthroughs. But make no mistake, the banking establishment is going to throw every wrench they can at this process. That's not speculation either. They've already been doing it. The American Bankers Association went full tantrum mode on this one. Tried to slam the brakes and kill the whole thing. Good luck with that. The OCC stepped in and gave them a reality check. Paraphrasing here, but the response boiled down to, too late, the wheels are already turning. Figure out how to compete. Go launch your own crypto offerings or fade into irrelevance. Your call. You can't help but smile watching how this is shaking out. Approval after approval keeps rolling in for crypto companies. Kraken grabbed one of the earliest spots in that line, but my gut tells me a bunch more names are about to pop up right behind them any day now. Case in point, BitGo. They already secured their own full regulatory thumbs up just recently. But hold on, because I'm not done yet. Banks are starting to panic about crypto access. Banks are already pushing back after Kraken Financial was approved for a Federal Reserve master account. The Independent Community Bankers of America warned that letting crypto institutions access Fed accounts, something traditionally reserved for regulated banks, could create risk for the banking system. Their real concern is obvious. A crypto firm plugging directly into the Fed's payment rails means less reliance on traditional banks. For years, crypto companies struggled just to get bank accounts. Now one of them is getting direct access to the system itself. No surprise the banking lobby is nervous. Right, so March 4th hits and Washington, D.C. puts out a fresh announcement.
Hello, Sophia.
The ICBA president and CEO issued the following statement sharing a significant concern with the approval of a master account for Kraken Financial. ICBA and the nation's community banks are very concerned with the Federal Reserve Bank of Kansas City's approval of a master account for Kraken Financial, granting non-bank entities and crypto institutions access to master accounts traditionally limited to highly regulated, insured depository institutions, poses risk to the banking system. Every time they open their mouths, it's risk this, risk that. Come on, we all know what risk they're actually worried about. Losing their own revenue streams. That's the only risk on their radar. And these institutions need a wake-up call. Refuse to get into digital assets in a meaningful way, and the market will simply move on without you. It's already happening. Community banks are Exhibit A. The early 2000s had roughly 8,000 of them operating across the country. Today, somewhere around 4,000. Half of them vanished. That bleeding isn't going to stop because the products and services they push on customers feel like relics from another era. Yet, even with all that writing on the wall, they dig their heels in. They won't budge. And that's precisely what's fueling the war against the Clarity Act. Okay, but there's another piece to this puzzle. Regulation. Banks reject White House stablecoin rewards deal and stall Clarity Act. Banks have rejected a compromise proposal by the White House on a major U.S. crypto market bill. Officials attempted to broker a middle ground between banks and crypto companies. The proposal allowed stablecoin rewards in limited cases, such as peer-to-peer transfers between users. However, the plan prohibited incentives on idle stablecoin balances. Crypto companies accepted the plan. Banks have rejected it, fearing large outflows. Wait, timeout. I thought everybody was blaming the crypto side for all of this. Coinbase was catching heat from every direction, remember? Funny how that narrative just fell apart. Because the evidence is sitting right here. Crypto companies looked at the proposal and gave it the thumbs up. They signed off. You know who didn't? The banks. They killed it. So let that sink in. The banking sector is the one standing in the way. For anyone out there who had doubts about whether this was really going on, proof is right here. Yes, it's accurate per Reuters today. Banks rejected the White House compromise on stablecoin rewards for the Clarity Act, allowing them only in limited cases like peer-to-peer transfers, not idle balances. Crypto firms accepted. Banks feared deposit outflows and went stricter limits. Trump criticized lenders for stalling. Something that really stands out to me, and Dave nailed it with this post. Can anyone explain when the banking industry has the ability to veto legislation? I must have missed that part in my political science classes. Given the damage they've done to the nation and the trillions in bailouts that they've received, it is unconscionable that they have that power. His point is spot on. Think about how backwards this is. Banks are out here vetoing bills. Since when did they get that kind of power over legislation? Oh, that's right. Follow the money. They've been writing massive campaign checks to members of Congress for years. I'll get into those specific figures shortly, but flip on your TV right now because mainstream media is roasting these banks. Check this from Bank XRP. President Trump versus big banks. Trump is calling out the banking industry for holding the Clarity Act hostage. The goal? A level playing field for the crypto industry. Banks need to make a good deal with the crypto industry because that's what's in the best interest of the American people. Donald J. Trump. Listen to this.
Welcome back. President Trump has taken aim at the banking industry for holding up the Clarity Act in the Senate. The president wrote on Truth Social this, banks need to make a good deal with the crypto industry and not hold the Clarity Act hostage. because that's what is in the best interest of the American people. I spoke with the CEO of Coinbase, Brian Armstrong, about this main issue, which is, should platforms of crypto platforms, be able to pay rewards to customers who move their money into crypto platforms and out of banks? Watch this.
This stablecoin reward issue is very important, and I think President Trump has showed incredible leadership here, creating a strong crypto agenda. We just got the Genius Act passed into law, which actually did enable stablecoin rewards to happen. The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda. They're trying to protect their own profit margins, taking money out of the pockets of hardworking average Americans and putting it into the coffers of these big banks that are hitting record profits. And so our view is that there should be a level playing field where banks and crypto companies can lean into stablecoin legislation as an opportunity. And that includes paying rewards to Americans so that they can earn more money on their money.
Cheryl Casoni, we spoke with French Hill, who's working on this legislation in the House, and he said it was agreed upon. Both sides agreed that, in fact, the crypto players would not pay rewards on money that is on crypto platforms and taken out of banks. But now there's this idea that perhaps the crypto players are coming out with backdoor ideas. Like Brian Armstrong said something about a membership program. Well, maybe we should, if you're part of the membership program, will be allowed to pay rewards. So, it's held up. And frankly, I think the crypto players and Coinbase in particular, it's in their best interest to keep holding this up because they are paying rewards right now.
Yes.
Because of this loophole in the Genius Act.
They are. There's two sides to this, certainly. On the one side, you can say, why wouldn't crypto platforms be able to pay rewards? Because banks pay rewards in many other sides, whether it's credit cards, et cetera. But at the same time, the regulation has to happen. I mean, you've got to have regulatory clarity because the banks themselves are the ones that are trying to move into investing in cryptocurrency, and of course, stablecoin being the backstop of all of that. At the same time, I think that Brian Armstrong made a really good point about that he wants to have that level playing field. At the same time, this is such a new industry, and there's so many question marks. I think having lawmakers get their heads around exactly what it is the crucial piece of this. And I know you got your interview. Yeah.
I think the CEO of blockchain.com just made a really important point. And he said, well, because I said, then the crypto platform should have insurance. They should have deposit insurance. And he said, well, and not everything is FDIC insured because it's only insured up to $250,000. And by the way, in terms of interest rates, they pay nothing on deposit account. I mean, it's so tiny.
Mainstream media is actually echoing the same point now. Their take is pretty straightforward. Push back hard because crypto already has working solutions out there. The tools exist. The systems are running. Giving banks more authority over any of this is completely unnecessary. All the leverage sits on the crypto side of the table. I've been beating that drum for a while, and yet somehow there are still voices in this community, influencers, creators, carrying water for the banking industry. That baffles me. When in history have banks...
Yeah, I low-key think that the banks are probably paying these guys to say that, right? Because the banks have lobbyists and they have people on the inside that will help them push forward. And he's 1,000% correct. Why would you help the bank? Why does the bank need more leverage, right? The bank's already doing this. The whole purpose is for the crypto to build a new system. How can they build a new system if the bank is going to be part of the system? As I think somebody mentioned earlier, if the bank want to do this, the bank should build their own tokens, right? That's the only way that this could work. The bank needs to get involved and make their own system as well. If not, the bank should leave the crypto industry alone. It's not going to work if the bank jumps in and tries to do the same thing they've been doing, right? It kind of defeats the purpose of bringing crypto in as a whole. Why'd you bring crypto in and give it to the bank, right? We're going to have the same slow system and the bank still making money hand over fist. The whole purpose is to get the bank out of the way, right? And I'm sure the bank, with their massive reach, will try to shoot it down, right? The bank's going to stay in the way until this is done. At the end of the day, institutional adoption is one of the biggest long term questions in crypto. And development involves major financial institutions could play a huge role in shaping where this market goes. If you enjoyed this discussion and want more XRP updates and crypto development, make sure you like the stream and subscribe. If you found this information interesting, share the screen. Tripping. Share the stream so more people can join the conversation. And let's get back to the video.
Ever looked out for ordinary people? I'll wait. Never. Now, on the Coinbase front, honestly, I couldn't care less about Coinbase. That's a distraction from the real conversation. The real conversation is this: crypto was built for people like you and me, not for bank executives. They don't control this space. And the second we start surrendering ground to them, everything that makes this industry different disappears. Full stop. Now, why exactly can banks torpedo legislation whenever they feel like it? Easy. Money talks. From 2023 to 2024, banking institutions pumped over $72 million straight into Congress through PAC donations and individual contributions. Major firms like Citigroup and Truist often lead in contributions, while lobbying efforts by top banks reached $22 million in just the first quarter of 2023. That $72 million bought them a seat in the room where laws get made. That's the whole game. And watching the banking lobby still pull strings over crypto policy drives me crazy. Nobody here is anti-regulation. Rules matter. But rolling over and accepting some garbage bill just because Congress finally put something on paper? Absolutely not. This is the moment to dig in and apply pressure until the banks fold. Crypto companies already looked at the deal and said, we're good with this. The holdup isn't coming from our side. It's coming from one place and one place only. The banks are the roadblock, period. And they have no right to be anywhere near this process. They shouldn't get to scratch out lines in a bill. They shouldn't be sitting behind the wheel on policies that touch your wallet and mine. And the audacity of it all hits different when you remember these are the same institutions that tanked the economy and then came crawling to taxpayers for a bailout. The destruction they've caused is staggering. Take yourself back to 2008. Everyday people watched their entire financial lives collapse. Mortgages underwater, 401ks destroyed, families starting from scratch. And the help that showed up for them? Nothing. Crickets. But those same banks that lit the match and burned it all down, they got handed a massive check courtesy of the American taxpayer. Chew on that for a minute. That history alone is reason enough to hold the line right now. We don't budge. We don't compromise from a position of weakness. If anybody should be making concessions here, it's the banks. All right, that's a wrap on this one. If you found
Agreed 100%. Why are we caving for the bank to beat us in the head again and again and again? Let me see, how long is this one? Let's do one more quick video. I think I actually closed the video I was about to actually look at. I hate when that happens. Dang it. Yeah, I think that was the other video that just closed. I don't know how that always happens, but let's see real quick if there is anything of mass importance here before we shut it down. See if I can find anything real quick. I don't see anything Let me go back and one more search. Let's try this multimedia while I'm looking for this video.
Hi, and welcome back, guys. Hope you're all having a great day out there. We have some breaking news I want to get on your radar in terms of what's going on with oil, what's happening in the Middle East, what Donald Trump just said. We're going to cover Ripple, XRP's price. We're going to discuss what is coming with clarity and more. If you do like staying up to date, type an X in the comment section, smash that like button. Let's get into it. As President Trump says, I think the war is very complete, pretty much. This just came out moments ago as oil prices have officially turned negative on the day, erasing a gain of 30% and one of the largest daily reversals ever recorded, as President Trump saying war could be over soon. In a interview, a CBS reporter put out that he stated, I think the war is very complete, pretty much. Now, we saw that the S&P 500 has erased all losses and has rose 0.7% on the day, as President Trump says the war is very complete. President Trump considering taking over the Strait, who's opening access to all oil routes, and Japan imports 94% of crude from the Middle East, and oil priced in yen has super spiked. So the Bank of Japan is trapped. Yen is weakening and import costs are exploding. The reverse carry trade was always and has always been about oil. Now, also breaking today, we got President Trump is reviewing an emergency, quote, emergency options to lower oil prices. The White House is exploring restricted U.S. oil exports to keep supply at home, intervening in oil future markets to stop traders from driving prices up, waiving federal fuel taxes to give people a break at the pump, lifting the Jones Act so foreign ships can move fuel between U.S. ports, and dumping millions of barrels from strategic petroleum reserve with the G7, as this is what the price of oil looks like right now. As former CFTC chair says, banks need digital asset market clarity more than crypto. Without regulatory certainty, they won't build digital payment rails. Now, this is a 31-second clip. I'm going to play it right here.
Well, there's a lot of good in the bill for all sides. So I think once we take the crazy out, and you know what? The banks need this more than crypto needs us. Why is that? Because the banks recognize the analog network system they operate on is going to be superseded by this. And crypto is going to build. These are risk takers. They're going to build it here, or they're going to build it up. They're going to build it anyway. The banks, however, can't afford regulatory uncertainty. Their general counsels are telling their boards, you can't invest billions of dollars in this that it's going to take to build this unless you've got regulatory certainty. The banks need this more than crypto.
Interesting way of putting it, right? I mean, it is true that their general counsel are telling them, hey, to get into this industry in a big way, you need regulatory certainty. And the banks do know that this is either going to happen in the US or overseas. The building is going to continue to happen. We're going to see this industry flourish and expand and grow. That is without a doubt. The banks also know from talking to advisors and their customers that they are interested in this digital asset space. They also know about the technology and how it can effectively increase the efficiency of their business practices, and these digital assets like XRP, what it can do for the liquidity and helping move value and 3 to 5 second settlement time and moving cross-border, all this stuff, they get 100%, but they do need regulatory clarity to move into this market in a big way. Now, also, as we take a look at this market continuing to grow and seeing the evolution, adoption happening, I did see here today that NASDAQ is partnering with Kraken to push tokenized stock trading. This is bullish for real-world asset tokenization, as we just saw here recently Kraken get their Fed master account, and we know that they have deep root and ties to XRP. We know that they are an investor in the XRP treasury company Evernorth, for example. Now, one thing that is often overlooked is the team members that Ripple has. We're talking about individuals formerly from JP Morgan, Citi, Merrill and Lynch, BlackRock, Federal Reserve, DTCC. And so this is one of the big reasons here on when we take a look at who is behind the board, who is working at Ripple, why we can see so clearly that when we talk about bridging the traditional system with DeFi, it is very, very clear that Ripple has put all the pieces together and getting the network effect established to enable the technology that they promote, the XRPL, with XRP being the native asset, to be right in the middle of it all. As here recently, speaking of the traditional financial system, many of you probably are aware that the world's biggest asset manager, BlackRock, is in trouble. BlackRock HPS Corporate Lending Fund, which manages 26 billion, received 1.2 billion withdrawal requests. This just came out this past Friday. That equals to 9.3% of the fund's assets. Might be a good time for them to go ahead and get an XRP ETF, as new spot XRP ETFs that were just launched in November actually attracted 1 billion in investor money. And of course, I think what's going on with BlackRock right now and Ripple behind the scenes is so much bigger. And someone that talked about this recently, I think it was on Paul Barron's show, was Abs from Good Evening Crypto. He did a really good piece where he's talking about, yeah, the XRP ETF for sure, with BlackRock, that's going to happen, but it's something so much bigger. When we talk about how Larry Fink has stated many times, the CEO of BlackRock, that there will be the tokenization of everything, stocks, bonds, derivatives, and how he's talking about within the next 3 to 12 months even, and what that means. And wouldn't it make sense that with their close relations, as there are a lot of very close ties here with BlackRock and Ripple, that they go ahead and use the XRPL? Now, I'm talking about what's going on with G7 countries are buying time. Last night, FT reported that G7 countries are considering releasing oil reserves, potentially as much as 400 million barrels as oil prices skyrocketed. This sent prices down nearly 20% in an effort to buy time. But how long will it last? The G7 countries have 1.2 billion barrels of crude oil reserves, which is equivalent to 60 days of oil flows through the Strait of Hormuz. 400 million, barrels can supply roughly 20 days worth of Strait of Hormuz oil flows, but it's a risk. If the war rages on, once these stockpiles are depleted, the world would enter an unprecedented energy crisis. In our view, Trump is looking to buy a couple more weeks as we see Japanese stocks getting absolutely crushed. Now, Lord Belgrave, who, give him a follow on X, puts out a lot of interesting posts. This is a former ex-City London banker that talks a lot about Ripple and XRP, putting out, I will say this carefully. As someone who's spent decades around sovereign balance sheets, central bank liquidity facilities, and crisis management frameworks, what you are witnessing is rarely what it appears to be on the surface. Periods of geopolitical tension, financial instability, and market volatility have historically served as a second function beyond their immediate narrative. They create political and public justification for structural change, new oversight, new controls, new infrastructure. In banking, large-scale system upgrades never implement in calm waters. They are introduced when existing systems are visible.
What up, Phantom Beats? The CT, CFTC, and OCC is giving these crypto exchange and banking licenses. They want them here. TradFi banks better read the room. You know they do, because they need to update the banking system. Everybody but the bank understands this, and I think the banks do too. They're just fighting the system. But they're fighting a losing battle, guys. This battle has already lost. The banks are just delaying it because they know once this hits the mainstream, the Federal Reserve is done and the banks will crumble, right? Unless they update their systems, they're not going to be able to keep up with the speed that crypto moves transactions. So let's see what Crypto Sensei has to say.
Implemented into the most important financial systems in the world, you got nothing. That was like the first clip that you heard actually connecting, saying Trump's been there, right? Because you see the White House and this and that, him being there is very important.
You did. I wanted to make one thing clear for the audience, and I think the clarity would be best coming from you. with the fact that you have done the massive deal with the DLD land department over here, is there any role for XRP over here? How would you separate that with the Ripples itself?
Dubai Land Department, this is what he's asking about, okay? They're tokenizing real estate on the blockchain, on the XRP ledger.
So Ripple is really like a digital asset infrastructure for institutions, including banks, asset managers, including DLD. And we're doing that through the Ripple payment product, through XRP ledger, through the RLUSD, so Ripple USD, and the custody. So we have those 4 products, and they are all using XRP. So for example, in the Ripple payment product, we were talking earlier about what's the use case for stablecoins. Today, the use case for stablecoin is massively USD. So the market makers rebalancing their portfolio. That's I don't know the exact number, but I would say 90% of the volume of USD. We're still scratching the surface, but on the cross-border payment, so Ripple is at the forefront of cross-border payment and leveraging XRP as a bridge asset. In TradFi, when you were at Bank of New York or Deutsche Bank for me, like we were using USD as a bridge asset. We are using XRP as a bridge asset. Why XRP? Because it's quick, it's fast, it's scalable, 1,500 transactions per second. So that's why, like, it's really about the utility of XRP. Yeah.
I remember you can scale 1,500 transactions per second, interledger protocol, state channels. There's a lot of things that you can do to scale that up when we need to do that.
Not an investment advice. This is not an educational piece of information as well. This is purely for entertainment. And I'm going to ask the question now. Does that mean that we could potentially see some surge in the price of XRP?
So we're quite focused on building the utility of XRP. We're super aligned to that goal for sure, but it's a
difficult task to say.
Okay,
let's move it away. Let's move away.
Defining the price.
Okay. Ripple never talks about price. If you notice that they don't. Brad Garlinghouse doesn't go out and tell you to buy XRP. He doesn't guarantee you prices. That is just not something that they're interested in doing. Remember, they are a blockchain infrastructure company. They are here to provide services to financial institutions, to corporates that need to upgrade their infrastructure to this new digital age. They help with custody and wallets and all of these things in one place. So you don't have to go to 10 different companies. You can go to one. And once they get their OCC charter and Fed master account, it's going to be all but over for Ripple and XRP here in America. They would be considered king, in my opinion, that, they have the most licenses, the most connections. They're in the most meetings with regulators and most important people. I mean, they are the company that every other blockchain company is looking up to try to beat. Absolutely.
I'm gonna go to some even more interesting area. Donald Trump is about America first. He is about, American companies needs to do things more. With Ripple being an American company, DLD over here, you've done the deal. Your next best competition, even though Ethereum is very much plugged in with the BlackRock in terms of a tokenization. However, could we see something coming from the top telling everyone America first, American companies should be used, and there could be some incentivized for Ripple being the American company in terms of tokenization of assets as the main blockchain to be used?
Great question, man.
There's been a huge mindset shift in crypto, and especially for American company over the past few months. And I still remember December 2020 when the SEC knocked on our door, like as a metaphor, but just before Christmas, I was pregnant. I was like, okay, what's happening here? And so Ripple fought that battle, not only for Ripple, but for the whole industry. And we're very grateful now that the case has been won. And so now it's about the clear rule of the roads. Yesterday with the Genius Act is another example of that. So we do see the US being very, very proactive in regulatory clarity. And so we do roundtables with like crypto leaders and Trump to help design the rules of the road. There's no like protectionism that we are seeing, and it's more like blockchain is very open and striving all together.
All right, let's keep it going here. I did want to show you this. XLS66D and XLS66 are making its way through the amendment process for the XRP ledger. We are talking about lending protocol. Here's the clip.
So many exciting, new, innovative models, lending models that allow me to take, for example, securities lending and using DeFi lending protocols, actually take and do securities lending very efficiently. Collateralization models where I can use cryptocurrencies or like a whole range of asset types as collateral against lending trades or a whole series of other operations. There are many exciting capabilities that you see in the DeFi space.
All right, let me show you how all of this would work, because I'm sure you guys are thinking like, Sensei, what the heck does all this mean? I get it. Ripple Prime is now an NSCC participant, meaning the DTCC infrastructure can face Ripple Prime as a clearing and prime broker, while Ripple Prime settles certain positions or collateral movements on the XRP ledger. XLS 66 and XLS 66D defines an on-ledger lending protocol using vaults, loan broker objects, and loan objects with fixed term, mostly uncollateralized loans funded by pooled assets designed with institutional use in mind. In principle, Ripple Prime could act as a loan broker or an aggregator for institutional vaults on the XRP ledger, while the DTCC only ever sees Ripple Prime as its counterparty. That keeps the DTCC's operational model intact while indirectly tapping XLS 66 for liquidity. The architecture and how like this would work behind the scenes is the DTCC NSCC side, broker dealers clear trades at the NSCC as usual, with Ripple Prime as either a member or sponsored access provider. Obligations net out in DTCC systems, but Ripple Prime's margin and financing managed against an XRPL pool. They are managed against the pool. The XRPL side, institutional lenders deposit XRP or RLUSD into a single vault asset that feeds the XLS 66 loan broker structure run by Ripple Prime or a syndicate. Loans fund financing for clients or tokenized collateral that backs the DTCC side exposures, and then the bridging RLUSD or other tokenized collateral on the XRP ledger becomes the funding leg. Smart order or risk systems at Ripple Prime continuously move liquidity between the DTCC margin accounts and the XRP ledger vaults using XLS 66 flows, loan set, loan draw, loan pay, etc. to manage fund terms. The benefits and potential scale, capital efficiency, native programmability, lending, and term funding on the XRP ledger. It lets Ripple Prime recycle idle XRP and RLUSD and tokenize assets as collateral, compressing funding costs versus siloed bank credit lines. It has risk transparency, it has operational speed, and it has strategic significance for the DTCC. I did want to move on and show you what this would look like here. If you had questions or Sensei, like what the heck does a loan protocol look like? This is how it would be structured out. You have depositors, you have the single vaults, you have the first loss capital loan brokers, and then right here, you have the loans, and then you have the borrowers. So borrowers, loans, it would go to the loan brokers, it would go into the single asset vault, and the depositors could, supply the vaults, and that's how they would earn some type of yield there. You also have this, she says, I'm very excited about the XLS 66. It paves the way for institutional DeFi in the form of vaults that have been improved for user experience. Evernorth is exploring how XLS 66 could support yield generation as part of our own broader strategy while contributing to the growth of the DeFi ecosystem. You also have DTCC, BlackRock, Fidelity, MasterCard, all about to go live using blockchain. It'll be a big impact for Canton, XRP, XLM, and Chainlink. This is a great post. And also here, globally, Ripple is set up since 2016 with some of the largest financial institutions, including Bank of America, Santander, Western Charter, Westpac Bank in Australia, Royal Bank of Canada, Canadian Imperial Bank of Commerce, and Tokyo Mitsubishi. As you can see here, they are positioned globally. Now, I thought this was incredibly interesting, using XRP not just as an ETF wrapper, but also using it for collateral when banks are trying to settle or doing repo. Let me play this.
I've been watching the XRP ETF, so maybe you can use that as a proxy to institutional flows. If you look at the other coins out there, it's negative inflow. So people are exiting the system. I find it interesting that XRP is almost like the reverse. Like a lot of folks are entering the system, almost like the inverse of what you're seeing in the market. I'm curious, do you have what is the reason that's happening? Why is there so much institutional interest around XRP?
Well, look, I first of all, I'll acknowledge, I think all of us are probably frustrated with what's going on in the crypto markets at large right now. I frankly don't understand why some of that is happening, because I think that we're set up to have a really, really strong year.
Yeah.
Part of that, our friend, was it Angela? I was talking about the Clarity Act and the Genius Act. There's positive tailwinds around those things. I also think part of the reason why you're seeing that happen within the XRP ecosystem is pent-up demand. Like, I'm thrilled we have XRP ETFs out there. You're starting to see institutional using them as lending collateral, which is also a very positive step of making.
That is huge.
I think people correct. I think it's a very, very big role, which is also in a very positive there. You're starting to see institutional using them as lending collateral, which is also in a very positive step of making.
That is huge.
I think people correct. I think it's a very, very big thing that maybe people don't fully understand. So I think there's a bunch of reasons that XRP ETFs have continued to perform well relative to others. I mean, look, as much as I'm frustrated by the price of XRP, it has outperformed almost every other major crypto this year.
Yep.
It's down about 21% year to date. Bitcoin's down 22 or 23. ETH is down 31% this year. Solana's down around 30% this year. There's a very high correlation in crypto in general. You know, I'm reading the same headlines you guys read about Jane Street and what have you. And like, I don't know what to make of some of the potential market manipulation. I'm sure that'll play out. I tend to take a very long view about where's this going. 5 years from now, and what I tell my personal friends is like, look, don't look at the price every day.
Yep.
Like just
100%,
like take a 5-year view. My optimism that 5 years from now you're going to be very happy is extremely high.
Yeah.
It took some conviction and fortitude to kind of make some of the bets and stick to the path. But it is interesting how most of crypto has kind of come around and be kind of like, oh, Ripple was right. You're seeing more. I mean, frankly, that means more competition for what's going on in the XRP ecosystem. But I'd rather have that than have people abandoning ship.
Absolutely. You want competition because that breeds better technology, that forces people to, change the game, right? Be better than the person next to you, the companies that you're competing against in the space. Now, why Brad said that most people don't understand this, I thought it was worth me showing you why this is such a big deal, like what he was saying. If XRP spot ETFs are being widely accepted as collateral, it means XRP is graduating into a high quality financial plumbing, which is structurally bullish for XRP holders and strategically powerful for Ripple, but it also shifts a lot of future activity into XRP ETF wrappers rather than the raw coin. What an ETF as collateral actually means: large institutions can pledge XRP ETF shares to get credit, margin, or derivatives exposure instead of pledging cash, treasuries, or underlying XRP itself. Collateral takers like banks, brokers, and CCPs increasingly accept ETFs because they are liquid, transparent, and easy to risk manage. The ETF collateral balances have already grown sharply in traditional markets. In practice, the ETF sponsor holds the underlying XRP in institutional custody while institutions move the ETF shares around inside repo. Remember, the repo market is like $2 trillion a day, about $9 trillion in the repo market as a whole. Securities lending and derivatives. So these are some of the biggest markets that there are: repo, securities lending, and derivatives collateral agreements. The implications here for XRP and holders: structural demand. Every ETF share posted as collateral must be backed by real XRP held by the fund. So ETF collateral use forces creations and persistent base demand for XRP liquidity. Supply sink effect. XRP held in ETF cold storage is effectively locked, similar to how collateral programs and other ETFs remove underlying assets from active float and positions are open. Less forced selling and volatility dynamics. As you increase the demand for XRP's use case in this particular use case as an ETF for collateral, for margin, for derivatives, it's going to remove XRP supply, right, out of the circulating supply, and of course that should raise the price over.
So for Bitcoin, how many here understand what XRP really is? No hater, I got a bit. So XRP is the actual token for Ripple, right? XRP will be the fuel for the XRP ledger. It's the actual token on the Ripple, right? When the XRP ledger actually starts running, right? You got the RLUSD and you have the XRP token. The RLUSD is the actual stable coin and XRP is the actual token. And the XRP will be spent and fueled for actually making these cross-border transactions. The RLUSD is the actual stable coin, but the XRP is the actual fuel or the token you use in the transactions. There is no escrow. It's already allocated 1,700 NDAs. And actually, there is escrow. Let me see here. Where is it? Yeah, in escrow is 36.9 billion. Bro, we ain't new to this. We are true to this, bro. It's the numbers right here. This is the XRP radar. There are 36.9 billion in escrow, 100 billion in total supply, 63 billion circulating. So there is plenty in escrow. So I'm not sure where you're getting your information at. Bitcoin, the P coin, petty coin. Not sure where you're getting your information from, my guy. But we're here to the myths. It's right here for you. The daily tracker of all 100 billion XRP, Ripple escrow, exchange holdings, ETFs, DeFi, AMM, pools, tokenized RWA, and corporate treasuries. It's all right here for you laid out. I'll give you the link if you want it. But there's 14.2 billion on exchanges, 795.3 million in ETFs and indexes, 223.8 million in DeFi, AMM, 1.5 billion in RWA tokens, and 473.3 million in treasury. Let me know if you need any more assistance with the XRP guy, because we got it all right here. If you're looking for misinformation, you came to the wrong place. And there is also the RWA XRP, which is the XRP ledger broken down. It shows you RLUSD. I don't know why it always jumps around. Ondo has CRX, Zacconi, Baraza Crypto, open-ended, digital, and Circle. So let me know if you got any more questions about the XRP, BIS, IMF, EDC, World Bank. Not sure you got any of that information from my guy, but this is the actual information right here on xrpinsights.com. ISBIFM ECF. So I'm not 100% sure there, but this is the information. It's definitely not all allocated. 36.6%. What's hidden in them MDAs, all that escrow. In them MDAs, all that escrow. I don't know what to tell you, but you can send me that information and we'll look through it together and see if there is any missing information. But clearly there is escrow. 36.9% locked in cryptograph escrow released monthly. So they can't be monthly releasing it if there's no escrow. I'm not sure. Yeah, 1.00 billion released on the first. Typically relocked 70%, 700 million. Net monthly 300 million. So I guess we're getting the information. Institutional or banks are trying to help you. Of course they're not. I'm not even sure how you can even say that. Why would the bank try to help you? The bank's never helped you. The bank only feeds you to death. I'm not sure what bank you're talking about, guy, but the bank doesn't help you. The bank uses your money, sends it to the Federal Reserve, and institution and banks trying to help you. Read that again. What's hidden in them MBAs, all that escrow. Institution and banks. I'm trying to. I'm tripping. Oh, yeah, you're right. You're right. Institution and banks. I'm trying to help you. Well, I'm not an institution or a bank, but I definitely understand that because the banks aren't trying to help us. Banks definitely, Peter. I'm not sure if we're misunderstanding what this guy's saying. I'm trying to help you. I'm trying to what's good, fellas? What up, Peter Morton? But yeah, so we have to see here, but clearly there is escrow in XRP. I'm not sure if we're following you 100% there. Bitcoin, the pedo coin. But maybe this guy works for the bank trying to FUD us out the crypto. I'm not 100% sure. But there is definitely escrow. Institutions and banks, I'm trying to help you. There's definitely escrow. Right? Because if there's no escrow, that means the price would definitely go up. But you're right. If you are against the bank, you are on our side. If you're with the bank, I'm not sure what to tell you. But the bank will lose here, guys. The Federal Reserve will finally be coming down, and I'm pointing you to look at institutions and their connections on thousands of XRP and other ISO tokens. I'm pointing you to look at institutions and their connections on thousands of XRP and other ISO tokens. Pointing you to look at institutions and their connections. I'm pretty sure get your money out of. Oh yeah. You're right. Yeah. We agree. We definitely agree. I'm definitely after Bank of America feed me to death. I definitely don't keep any much in the bank other than pushing transactions through. But yeah, you're right. At some point, you should not financial advice. This is just for entertainment purposes, but definitely start moving your money over to the crypto before it's too late and the banks collapse and people are going to be wondering why they didn't get into crypto earlier. But yes, Bitcoin, the pedo coin, we get you, bro. We are definitely on the same page. These institutions are shady, to say the least. Because if not, they could have passed the Clarity Act a long time ago. The only holdup is they're fighting for yields, right? They want the yield and don't want to give it to us. And that would be the only reason, as Brian Armstrong pointed out, there's no reason why the Clarity Act hasn't passed. There's no reason there is no legislation yet, right? Buy silver XRP and buy cold wallets. Do not keep it. Yeah, I've already learned that from previous investments. Get a cold storage wallet and get it off the exchange, because when the price starts going crazy, exchanges are going to do what they do, right? They're going to lock you out and they're going to hold it until they get their money out, and then they're going to let you sell. But thanks for that information. That's definitely helpful. Silver Bitcoin or Bitcoin, the P coin. But definitely understand what you're saying now, and we agree. But think of the FDIC, right? The FDIC only insures 250,000. If you guys are unaware of that, so people are saying I got millions in the bank, and the bank will help you. No, the bank only insures 250,000. After the 250,000, you're on your own. So that means the bank will take the rest of your money, and they've been doing that for centuries, the whole time. So definitely get your money off the exchanges. If you can, get a cold storage wallet. Tangent, Zellcore, and you have your keys, your crypto, guys. If you don't have the keys, you don't have your crypto. But thanks for joining. Don't forget to like, share, and subscribe. If you enjoyed this discussion and want more updates for XRP and crypto developments, make sure you like the stream and subscribe. You found this information interesting, share the stream so more people can join the conversation. And thank everyone for watching. And as always, let's get back to the money, guys, and stay dangerous. It's your main man, BTM, signing out. Miners out. Ledger titanium plate stamp seed phrase, it will survive a house fire. Yep. Definitely get your seed phrase somewhere. But thanks for joining, guys. And tune in, same bat channel, same bat time. And miners out.